This meeting is being recorded.
Okay, perfect. Folks, please unmute yourself. We've got some people. All right, so everyone is on mute now. So please unmute yourself, Sean, as well. I did it for you. Don't worry about that. Okay, so, all right. Okay, so we are talking about divergence today. I noticed that lots of folks are asking about the different indicators. First of all, divergence is indicator approach for reading the chart. What do I mean? Like some people are just looking at the price action. For example, if you are looking at the S&P 500, if you just see the price action, see the chart without any indicator, this is a price action approach. This is totally different approach. But while you're using indicators, most people are looking at the divergence. So if there is any divergence, they are calling, hey, I've seen the divergence there. So probably market is going to reverse from the downside to the top or from the top to the downside, right? But we don't know exactly when or how we should trigger the point. I mean, like how we're gonna set up the trade and when exactly we are expecting market is reversing back down or reversing back up. So in this course or today, we're talking about this. First of all, we want to recognize divergence. What is the divergence? How we can recognize it? And when we recognize it, are we gonna set up our trade or get into the position as soon as we see the divergence, or we are waiting? How long we should wait? At what level we are going to trigger the position, right? Okay. Is that clear so far? Just please say yes in chat box or something like that. Okay. So I'm going to review some charts here. For example, the first one that I want to talk about is live cattle. But let me just, okay, so let me, okay, no data. Shoot, all right. So just give me a second. I'm gonna just put a white here, whiteboard or something. Where's the whiteboard? Whiteboard. Whiteboard here. Share whiteboard. Okay. So just imagine market is going up and down, but obviously in uptrend. Okay. So in today's session, we're talking about regular divergence. What do I mean by regular divergence? Regular divergence is talking about when market is, regular divergence is when market is going to reverse. So when we have higher high in price, but just imagine this is RSI. Okay. Lower high in RSI, then everyone is saying, oh, we found a divergence here. Probably this is a reversal point. And probably they're right, right? But exactly, do you know if this reversal is happening at the right time that you're getting into your position? Or if I just put it like, if I want to scale it up, so probably you will see here something, especially at the end of the divergence, before rolling over, you will see lots of higher highs, smaller higher highs, smaller lower lows. And you put your stop loss here. Oh, stop. And then another one, stop. And then another one, stop. And when you are done with your trades, when you're losing your money, when you're out of the money, suddenly market roll over. And say, I was right, I was right, I was right. But you didn't get into the position just because you were stopped out. So you didn't find a good spot for reversal. So that's the key lesson. So lesson number 1, we want to find out the divergence. Lesson number 2, when exactly we are going to take a position with a minimum loss. Also, another thing that I mentioned, for the regular divergence, we are going against trend. So this is very important, folks. We are going to take a position against trend. And you know, some folks are saying trend is your friend until at the end. So when you are taking a position against trend, you are risking your account, you're risking your position, you're risking a lot. That's what I'm saying, basically. So be careful when you are taking position against trend just based on the divergence. All right. So let me just share back again this one. All right. So for example, here, this is S&P chart, right? So this is S&P chart. And as you see here, I have 3 indicators there, but which one is useful for divergence? The first one that I'm looking at is MACD. MACD without any lines, just histogram bars. So if you don't know what is MACD, so there are a couple of items in MACD that you need to have. For example, these are histogram bars, and when you are in this phase, in blue phase, you are in positive, and when you are in the orange or red one, you are in negative phase. You see, this one is negative, this one is positive. So this one is positive, this one is negative, right? But there are some lines there, I don't use them. I just use histogram bars. So these are histogram bars, right? Also, the second one that I'm using is RSI. The period is 14. The period for RSI is 14. And for divergence, we are paying attention the origin of the divergence. And I'm telling you, folks, the origin of the divergence, if you want to find out any divergence in RSI, make sure first one is in overbought or oversold condition. Don't take any divergence between here. So we don't care anything here. We don't care anything here. We just care here, 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 here. Okay? So whatever you see here, it's gonna go fail. It fails, right? So for example, between these two, you see this one is higher than this one, right? So let's see what's happening. So this one is higher than this one. This one is lower than, this one is higher, this one is lower. So there is an obvious divergence here. So let me just minimize this one and this one. So between these two highs in 4 hours chart, let me just clean up this one. Between these two highs, between this one and this one. So we just scale it up bigger, zoom it bigger, and we notice that, okay, this one is higher, this one is lower, but price it, this one is going higher, this one is lower. So there is obvious divergence. So when you see a divergence, you see divergence just happened there. And when you see this one, probably you take a position here, 2, 3 candles go down, and then this one, boom, stop loss. Let me just put it there. So probably you see divergence here, you wait for confirmation, and confirmation is there. You take position here, 1 candle goes down, fantastic, hey, I'm in the money, stop loss is there. And then the next candle goes a stop hunt, and then coming back down. So for this one, I'm just giving you the trip. Here is the tip. Well, let me just maximize MACD because MACD is important now. All right. So let me just hover it down. Okay. So this is your pivot and this is your pivot, right? What's the low of this pivot? Is it here or is it here? Sometimes it is confusing. Some people are saying here, this is the low for this pivot high. I'm saying this is the low of this pivot high, but the other one say, no, this one, initiate this one, then coming back down, then this one. I said, okay, guys, just to stop arguing, look at the MACD. MACD is in negative phase here, right? So when you see MACD is negative phase, so this is your lower pivot here. Which one is the lowest? This one. So take this one as a lower pivot. This one is the higher pivot. MACD is coming down, so this is the lower pivot. MACD is up, this one is higher pivot. Easy, simple, right? Okay, so we know there is divergence between this high, and we know that this is a pivot low. This is a pivot low, not this one. This is a pivot low just because we got help from MACD. MACD says anything between here, there should be a pivot low. What's the lowest one? This one is the lowest one. When you notice this one and this one, okay, when you see the divergence between this pivot and this pivot, but you don't know what is happening after. You just see the divergence here. This is the real scenario, right? So you see the divergence happening here, and you want to take a position here, but unfortunately, you stopped out there. So that's what I'm saying. Use your Fibonacci extension. There is one extension usage in Fibonacci. Some people are saying this is high, low, low, high, and here's the low, right? Some people are using that one. I'm not using this. I'm using this one is stretching all the way down the level at the third low, right? So this low and this low is supposed to be the same level. And I already put it in my Fibonacci. This is my way. I'm not saying this is the correct way, but this is my way, right? So I just took this one, high to this one. Here's the extension. So when I'm looking for divergence, if I want to take this trade short, I'm using 27% to 38% Fibonacci. So this is the level. The second level would be 61% to 78% Fibonacci. Okay. So when market reaching out to these levels, I'm expecting prices coming down or reversing back down. Unfortunately, in this case, price just get close with this shadow, gets close to this one, but it didn't get to 27% Fibonacci, right? Let me show you some more examples. Here is S&P going to weekly chart right there. So this is a COVID crash bottom, and this is top of the market in 2021, December 25th, 2021, right? And after that, we are in bear market, obviously. But look at this. So let's move this one out. And please don't pay attention to this. I just want to clean it out, my chart. Please don't pay attention to any of these lines, right? Just save it there. Okay. So right now, obviously, price is making high, higher high, low, higher high, low, higher high. You see, this is the series of lower, higher lows and higher highs. So when we are looking at MACD, obviously MACD is coming down. And look at the phase changing here. So we have got a phase changing here from the blue to orange, again blue to orange, again blue to orange. And look at the momentum. Momentum is falling between this high to this high to this high to this high, again to this high to this high, this high to this high. Momentum is falling. Like since the beginning of this rally, especially after October 2020, which is 2 years ago, momentum was down, but market went up. So this is weekly chart, and you see how exhaustive move is that. So whenever you see divergence here, if you want to take a position against the trend, how many times you would be stopped out? Many. Just because, first of all, you were betting against the trend. Secondly, you wouldn't get enough good level. So let's see how we can get a good level to expect market is coming down. So this is a first bottom, right? So this is the lowest one. Am I right? Then after that, you see market is coming down. Momentum is coming down, market is going up. So again, using our Fibonacci tool. So what did I say? I said, find out the low to the first top. The first top was here, just because between this low and this top, we changed the phase here. So this is the first top, right? Right, folks? So what did I say? I said 27 to 38% expecting price reversal. It didn't happen. Does it happen? Yes. Once here, just touch there, coming back down, touch there, coming back down, and we noticed that no, it doesn't roll over. For 2 weeks, you see for 3 weeks, actually market went down. Fantastic, right? Even worked out perfect. If you just see that one and take a trade, the first week, and I said, okay, this is enough for me. I'm gonna just put my stop loss above this high. Second week, went all the way down, and you were in the money. So you shouldn't expect market is going down like crazy to there. So as a trader, when you are nicely green, I mean, this is red bar, obviously, but you are green just because you're short. But when you are green nicely, and especially when market the third week open here, went all the way down there, so you should take profit somewhere here. If you didn't take a profit, that's your fault. Because you are betting against trend again. Just imagine you are betting against trend. It is hard to bet against trend, even if you see divergence. So this one is coming down, and the next reversal area, the one that I said, was here, 61% to 78%, and market just topped out there. So here is the 78%, market just went up one candle, coming down sharply, the next one, third one doji. So you can't just take a trade again here. This one, take out the previous pivot low, initiate the last high. So you can stay with your trade, and you can make it risk-free when something like this happens. Right? So this is S&P 500, and I can show you different sectors. Like if we go to, I don't know, can I just move this one out? Oh, I can move this one out, perfect. So if I go to ETF, what do I have here for you? I just make some ready for you. Okay, so let's go to XLF, which is technology ETF. Okay, so this is technology ETF, XLF. So as you see here, we have got this one. I don't know if this one is top or, yeah, this one is a bit higher. But again, unlike MACD and RSI, they need to confirm themselves. They need to confirm themselves. Okay. So when you see something like this, you see price is going up, but MACD is coming down, RSI is coming down, right? So I'm just XLT. You're right, XL. What did I say? XLF I said? Sorry, that's financial. It is in my list, XLF actually. Yeah, XLT. So this is so you see this one is so this one is down between these two, and this one, as I said, needs to be in overbought condition, the first one. So this one is coming down as well. So these two are confirming each other. Price is going up, MACD is coming down, RSI is coming down. Perfect. We have reversal. When? So this is the first top. First top when divergence initiate. So divergence initiate from here. Divergence didn't initiate here because we have high, we have higher high, we have high, we have higher high. So we don't have any divergence there. So divergence initiate here. This high initiate the divergence. Then after that, we are seeing divergence. Before this, we don't see divergence. After this, we see divergence, right? So this is the top, the first top in divergence. This is immediate low before the top, right? This low initiate this rally, right? So if you don't know which one, go to MACD. MACD says this is the lowest one, this is the toppest one, right? Perfect. So I'm gonna just use again Fibonacci. Go there. Here's the low, here's the high. Fantastic. 78% market top. 27%, the one that I said, market just had a correction. Right? So these levels are like, for those folks who just participate last sessions, I have one term, Moses stick, huh? So this one is Moses stick. So it just trigger right away, dumb. Coming down, right? So 27%. Do you see divergence between recent lows? Oh yeah, we would talk about that. So who said that? Sorry. Rashid. Yes. Yes, we would talk about the lows as well. So you see this one is coming down. We saw this gravestone doji there, confirmation. So when we got into position there, we put our stop loss there. When we take out this is a bullish consolidation, right? So if you know that this is a bullish consolidation, this bullish consolidation failed here, so you can stay with your position. You can stay with your position. So we are going week by week, day by day. Just because we saw something in the chart, we shouldn't stay there forever, right? So we are traders. So if you just click a short position, put your stop loss nicely in the money, then next week market is just showing something engulfing this area, engulfing this area coming down. You can stay with your position, at least make yourself risk-free without any headache, just leave it. And then when this one sharply is coming down, then we should say, okay, probably market is into trouble right now. And it was, and it is still. So Rashid is asking, between these two lows, we are seeing divergence. Okay, so that was from the top point. So we are looking for short position. The one that I show you was from the top, reversal from the top, and it's coming down, right? So how about this one? We find out something there, and then there should be a potential of divergence for getting back up to the bull run. In this case, we are actually having the history of the chart, right? So we have got a history of the chart, and it is kind of like a cheat sheet for us, because And nailing the top when there is no history there, it's very, very difficult. So that's why we are using Fibonacci. But right now, when it's coming down, we have got a history. We can just draw support, resistance line, whatever we have. Then we find out the divergence along with moving average. So that's going to be very, 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 very helpful. Because we have got something already. On the top, we didn't have something already. That's going to be tough, right? So I started from the tough part. Now the easy part is, obviously, this is a downtrend. We are seeing high, low, lower high, lower low. And there is a divergence here, clear divergence from oversold condition, initiate this one to this one. This one is getting up. So this is a perfect, well, it is very, very close to the oversold. It is not something like this we would like to see, but it is pretty close. So we can say yes, okay? Between this one and this one, we have got divergence in RSI and nicely in MACD as well. We've got a changing phase here. We have got a lower, higher low here. We've got a low there. So when we are expecting market is coming back up. So again, without any history, what did I told you for the top? So we are going to use our Fibonacci. So this is the top prior this low. So this is the here, all the way down there. So you see market just XLT is coming very, very closely to 27% extension. Very, very close. So that's the first thing. So if this one stretched down there, I would be buyer. I would definitely buy it. And some people probably would miss that one just because of this tactic, right? But here's another one. We have nice consolidation 2 years ago. So again, because we have the history for the chart, we were expecting, especially in this wide range bar. You see this wide range bar? Just compare it to the other candles here. So this wide range bar is institution money for sure, without checking the volume, without checking the inflow, outflow, nothing. So we as a trader cannot make this weekly candle. This is institution candle. Especially after that, look at the rally, right? So we are expecting those institutions are going to support their investors there. So we already, before seeing any divergence, anything, we knew that market is going to have a bounce there. Right now, this one, this level, 109 to 121, is coming along with 200 weekly moving average. As you know, I'm not a fan of moving average. I think this is the last thing that you need to check. And even if it doesn't come along with your analysis, don't worry about that. But in this case, it comes along with our analysis. It comes along perfectly with our area. And right now, with today's lesson, we have got a nice divergence there. RSI is sloping up. Seems like momentum is shifting. Also, I'm going to say something else. It is not based on the divergence, but it is based on the momentum. This is a stochastic. I'm using this one. Stochastic is in oversold condition, nicely coming back up to have a reversal. So probably we would have reversal there. And sure enough, we had reversal there. How long does it take? How long does it last? I don't know. But it lasts a lot. So right now it is consolidating. Everyone is saying bullish consolidation, but I'm going to give you a tip. Bullish consolidation works when we have a negative MACD, not positive MACD, because this one is ready to fail. This one is ready to fall. Let me give you an example. Going to S&P chart, I'm going to show you. So don't take any bullish consolidation as like a bullish pattern. there is a certain probability to fail. Look at that. So here is daily chart. Where is that? Look at this. I knew that lots of people, I remember that lots of people, oh my God, this is fantastic bullish consolidation. It's going to rip up to the upside, but rip down to the downside and just screw everyone. Why? This is the reason. This is the reason. Momentum is not good enough. When there is no momentum, stochastic is getting to overbought condition already. Stochastic said, I'm done. I don't have enough momentum. Right? So don't be surprised if bullish consolidation fails.
I don't know, Ali. You see consolidation after that wide range bar, the flagpole there?
This one?
Yeah, you see.
Yeah. It reacts very well.
Yeah.
It reacts very well. It went up, then coming back down. This is a Fed pivot rally. Remember, Federal Reserve just say something, I don't know. Powell said whatever Powell said, boom, market just went up, but it didn't have follow through because of this is very, very technical, to be honest. Very, very technical. Everyone, like a simple technical analyzer, they can draw this line and they can say, okay, this is going to reverse back down. And sure enough, we had, and right now, what happened to that Fed pivot rally? It went down, just engulfed this one. And now today it just came down. But volume is very light. I'm just checking out the volume today. 66 million for SPY. Yesterday, 60 million.
I haven't seen over 100 million for a long time.
No. 100 million is this guy. The rest is less than 70, 80 million.
Yeah.
So volume, it was light, but seems like this one just a hype. Especially when we are below this. This is not a pattern of strength. This is pattern of weakness. Right. So anyway, so let's focus on our divergence. So that one was, let me see, what do I've got? Oh, Amazon. Let's go to Amazon chart. Another example. So here is Amazon weekly. By the way, if you see divergence in weekly, monthly chart, that's going to be very, very powerful. At least you will have 2-3 weeks follow through. If it reverse.
You like seeing so you think that on the longer term time frame, divergence is more powerful than on a hourly or daily time frame?
Definitely. So I'm saying monthly chart is like grandpa.
Okay.
Weekly is like father. Daily is yourself. When your father is say something, you should pay attention.
Good analogy.
Yeah. And your son is 4 hours short. Your grandson is hourly. So they have energy probably for a day or two, but they don't have energy for 2-3 weeks. Right. So this is Amazon, and look at this. So we have got, let me just clean out this. Again, don't pay attention to these ones. These are more doodles. But anyway, so in the downtrend, we have good history of Amazon. So we know that this wide range bar, this is institution. This is institution because after this, market went all the way up there. So this is rally-based rally, right? So right now we are having a low, and here is the lower low. And this lower low seems like is not finished. Probably we are going to test lower. Where we can, again, I'm telling you, we are seeing divergence right now between these two. When you see something like this, when you see enough chart, you will notice even without indicator, you will see, oh, there should be a divergence there. But there is divergence here. So you see between this low, fantastic. So this low is in oversold condition. We like this. This is the second low in price. Look, RSI. RSI is there. So even if RSI is coming down here, still we are seeing divergence, right? MACD confirms RSI as well. So here's the low, here's the higher low, here's the low, here's the lower low. So where is the initial point? The initial point is there. So the top is there. MACD is telling us this is the low, and prior this low is this top. This one or this one or this one, I don't know. So this is the one. If you're confused, look at your MACD. MACD tells you. So this is your top, this is your low, this is your top, this is your low. And probably low still stretching down. So go with Fibonacci. We knew that I drew some levels here, but we know that we just want to get confirmation from Fibonacci. So this is the first touch. The second touch is there. 27% exactly coming along with this area. So probably next week, if we get, I don't know, there is no must. But if we get a lower low, probably 82 level for the Amazon is going to be the bottom. 82 to 74, there should be a reversal point. And this is coming along with this wide range bar and coming along with this area. Right? So
Ali.
this is Amazon.
Ali,
Yes.
can I have a question? Why do you use 27%?
Because it works well.
Is that it?
Simple as that. You can use different ones as well. It's based on, to be honest, because this is the first level after 100% price satisfaction. Because price is getting exhausted when it gets there. Lose the
Right.
momentum, because we are having momentum to the downside, right? So everyone is pushing like price going down, down, short, short. But when it gets to 27%, this is the first trench when price is getting exhausted from the top or from the bottom. It doesn't matter. Price is getting stretched and exhausted there. If there is enough momentum to push price down, probably 78%, but I'm not seeing 78% for now for Amazon. But if it wanted to drew 78%, look how fantastically it's coming along with this one. So here is the 78%. You see this guy?
Yeah.
So this is absolutely institution candle, right? Compared to the other ones.
Yeah.
So I'm going to just look at that. So in capitulation phase, probably we see Amazon $46 or $50. I don't know if it's going to happen, but everything is possible. So if it gets there, this is damn buying opportunity. And I'm telling you, everyone freaked out. Oh my God, what's happening? So
I wish they go down there.
well, yeah, for sure. Why not? Why not? If you are Amazon, so don't short it because we find this level. Don't short it from now. We are, as a trader, we are just waiting for a bounce. It goes up there, and probably we can just short it. But there is a possibility. But there are lots of support here. So don't get me wrong. There are lots of supports there. But in capitulation phase, again, this is good candle. Even without divergence or something, if you just look at these candles, make sure that find a good one. Especially this one is at the breakout. Yeah, exactly. This is at the breakout, and never test it. Never test it. This is fresh level. It's fresh, exactly. So this one tested this guy. This is not fresh. This one institution, but tested this consolidation. You see this consolidation? So this one is coming down. Stop hunt all these guys. Remember liquidity pool, the one that we talked in supply demand course? So this is liquidity pool. Everyone just put their stop losses there. Price just stretch down, collect all the stop losses, and boom, going up. So like today price action was amazing. Just if you go to S&P, I thought that even yesterday daily analysis, I don't know if you watched that one. I told you, hey guys, probably we get there and price doesn't have enough momentum to get to the TP4, TP3, and sure enough, we had the same thing. Look at that. So this is the one that I talk. Price get up there, boom, coming down.
Yeah.
So I was waiting for this. And
Yeah,
still,
I was waiting to get to the 4,000 too, but I saw something um, funny happening before the CPI come out, so I just exit my longs and reverse it to short.
Mhm.
And
Nice.
I didn't expect. I had the stop loss just above this green candle, and then it happened so fast. It dropped down all the way down. So I was a little bit scared. So I took my profit and run.
Yeah, and you see, guys, this is absolutely price action course. I just want to tell you, when we have this long shadow, didn't take the top,
Mhm.
reverse back down. What does it tell you?
It's coming down.
It's coming down.
Yeah.
Look what happened after, because it didn't set another higher high.
Mhm.
Yeah.
This is lower high. Even after this institution, this is institution, right? So look at the shadows. There are tons of buyers there. There are tons of buyers there. So this one is coming all the way down there, soaking back up, but it didn't have enough power or momentum to get to the higher high. So when you see this one, and when you see in smaller time frames, especially, for example, go to 10 minutes, this is my favorite. Go to 10 minutes, you will see, okay, we have like shadows, and then coming back down. When we get below this candle, this candle was the last tranche, and I said, okay, I'm not going up, I'm going down. Coming
Mhm.
down, consolidation, boom. Anyway, so yeah, I'm talking about different things. But yeah, I was talking about this level. Let me just zoom back here. Here's this level, right? So this level, we were waiting for this, right? Again, wait for short setup. I didn't trigger a short setup just because a PPI just came out. This is Friday, low volume. Next week we will have tons of news coming to the market. You should expect next week, every day is supposed to be something like this. Market is going up and then coming back and then going up. So if you think that you have no confidence to take a trade, cash is a position. That's what I'm saying. Just take your money on your pocket, enjoy. Even if you want to just release your stress or something, go to your demo account and then trade in your demo. As much as you can trade on your demo, and you can learn. You can learn. You just expect, okay, probably market will have like something like this coming down. Let's short, stop loss there, short. Okay, fantastic. I was right. But sometimes you will be wrong and you don't want to smash your account, right?
No.
I think
I've
next week's gonna,
trade small.
I think next week's gonna trade in a little bit of a range, but be very volatile, like you said, a lot of ups and downs within a range.
I think next week is going to be decisive week for the market for the next 2-3 weeks.
Yeah.
We
I have the
have
feeling
lots of.
that the Fed will pump the market up again.
I don't know.
Yeah.
I don't know.
I don't know. Recently, I have these feelings before the CPI, the PPI come out. It's like strange feelings. I can't tell, but it's just strange.
Yeah. So based on this, I would say any bounce wouldn't take out this pivot.
No.
Mm.
Probably this is the third leg and then coming down.
Yeah.
I don't know. So this is another QM pattern. Remember QM pattern. So this is the shoulder.
Mhm.
This is the head.
Yeah.
We engulf this, and if you go to 4 hours chart, it's going to give you exactly what we're talking about. So let's go to NASDAQ, because NASDAQ has better chart.
NASDAQ a little bit stronger than S&P today.
NASDAQ was stronger, yeah. But look at the Russell. Russell was interesting just because when NASDAQ when NASDAQ was positive, Russell was negative, and I wanted to take short position. Yeah, exactly, Dow. So
Dow's in trouble.
Yeah, here's the demand area, right? So this demand area, this is your left shoulder, this is a head, and this is right shoulder. I was waiting for here to take short.
Yeah.
This is my white, and this is okay. If it gets there, I'm gonna short the market.
Yeah, but it didn't get there.
No, but this one is coming down to this pivot, to this demand area. This demand area is now worked. This is the bounce. The next bounce, if we get there, probably we are getting there, and then boom, coming down. I don't know. Let's see. Okay, so let's go back to the divergence, guys. Another one is SMH. So here is the SMH. And if you trade NASDAQ, you should follow XLT and SMH because those are two wings of the NASDAQ. So again, as you see, COVID crash bottom, high, choppy, sloppy, going to the upside. Sorry, what?
I'm saying it, XLK is technology.
Oh, XLK, sorry. Yeah, XLK, you're right. So this is the bottom, this is the top, choppy, top, right? So between these two tops, do we have any divergence there? We didn't, right? So the tricky part is we had divergence between these two, but then after that, divergence faded out. So here between these two, divergence happened. But between these two and these two, we didn't have divergence. Also in RSI as well. So we had fallen momentum in RSI, but after this top, we didn't have divergence. Still, just because we had this divergence here, we can set up our trick. So what was our trick? So we find out this is the bottom, this is the top, this top and this top initiate the divergence. So this is the first top and this is the first bottom, right? This is the first bottom, this is the first top. Again, going there. 27, 28% again. Again, as I said, price is getting exhausted there. If you find out a good level, you will have high probability to trigger a good setup in divergence. Even we didn't have between these two divergence, right? So we had divergence here, but divergence faded out to this one, but still works. And between these two, right? So between these two, to be honest, I didn't analyze this, but for sure, I'm telling you, there should be a divergence here. Yeah, there is divergence there. So this one and this one, I don't know if, yeah, there is a slight divergence there, but in MACD, it is very obvious, right?
Mhm.
So what's the top here? This one or this one? I'm confused, I myself. I could be trapped. But when I see MACD, I notice that this is the top. We don't have any top in MACD here, so there is no top here. So this is the top, this is the bottom, right? So if this is the top, this is the bottom, where is our Fibonacci? If you want to use Fibonacci tool, here is still, there's going to be a possibility to 153, right? And this 153 is coming along with this consolidation. This is prior COVID top, COVID crash, COVID double top consolidation, breakout to the upside. So this is great buying area. So this consolidation, I don't know if it's going to happen or not, but look at the momentum again. So whenever we are in downtrend, when we see a stochastic momentum is getting to the overbought condition, crossover, this is a selling signal.
Yep.
Right? So all the charts that I'm reviewing is telling me next week or future, even if there is any upside, upside would be limited.
Mhm. Mhm. I agree.
Yeah.
Unless if the dynamic has been changed, like Federal Reserve is telling, we are not going to increase the rate, we are going to pause for 6 months.
Mhm.
Everyone is getting bullish. Oh my God, this is favorite word that I want to hear. And Everyone is
But
getting
wouldn't
back.
that cause the market to crash down more?
I would say first rally, then crash.
Right. Oh, right. So they attracted the money in and then crash.
Yeah, because he's gonna be, would it really be like quantitative easing in a way?
Yeah.
That's
But
what
people are,
are.
yeah, people are just feeling that one quantitative easing is coming, and
Yeah.
then they just say buy, 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 and this is valuable price. We are not at the top, we are at the
Right.
bottom. This is the bottom, so let's hype it. And probably market is going up, and then earning is coming next 2-3 months. Everything is slowing down. People are getting laid off just because companies doesn't make money.
Right.
Revenues is coming down. I said, no,
Right.
we are in serious recession. Fed said
Right.
we are going to pause, but they didn't pivot. And when Fed pivot, it means market or real economy is into trouble.
Mm-mm.
They don't have
Is
any other excuses to pivot. They are pivoting.
Is that
just
why
be-
they hike the rate height so much so they prepare for the pivot, so they have
Yeah,
more bullets to
but you don't know exactly how
reduce.
far they're going to go.
Yeah,
Yeah, it is high compared to 2 years ago, but you don't know exactly. So this is again, because price is there, it doesn't mean that it is expensive, because it can go there, it can go there.
Mm.
It is expensive there. I'm not saying it is cheap, but it can go there. It can go there. It is cheap now. I don't know. Fundamentally,
get cheaper.
probably it could be cheaper, and it could be cheaper as well. Yeah, you're right. So it can go down because it is not rational. Market is irrational. We should take it.
It's all emotional, isn't it?
Yeah, exactly. So this is another one, and the last example is live cattle. Hopefully this one comes up. This is not for all people, but this is one of the favorite one for myself, because when I see this, I think still this is the historic top in beef price. So we are at the historic top of the beef price.
Ah,
So there is no surprise if you think that if you're going to Costco or Walmart or buying beef, oh my God, my budget is blowing off. So because we are there, and this is 2017 when price was up, so we are at $140 per, yeah.
kind of just like oil.
Exactly. So we are there. So, but look at that. So even in monthly chart, RSI doesn't give us divergence, but MACD is giving us divergence. So
Mm.
this is one signal. Another one is this. Weekly chart, MACD is giving me a nice divergence between this high and this high. RSI is giving the same between this one and this one, and it satisfies my assumption. This is in overbought condition. And beef price, as you know, it's not like a Tesla or Apple or something. It can't go up forever.
Right.
So people are getting into the street and they are going to strike. What's happening in our, like we can't buy beef or something. So people are getting crazy. So governments need to control some prices, like a oil price or gas price or whatever, right?
Yeah.
Even Biden can go to, I don't know, Russia or something, send us some beef, or Canada, come to Canada. We have good beef here, actually.
They don't
Yeah.
have beef in Russia. They have more
Yeah.
oil.
So this is,
They got woolly mammoth.
so this one is tricky, folks. If you see this is the bottom, this is the top, this is the top, and what was the bottom? The bottom is here, right? So there is one bottom here based on MACD. There is another bottom here based on MACD. Let's analyze both. So if you're going, we know that this is the top. This is the top for the divergence. Let's talk about this. This one, steel price has some movement to 155. If we take this one as a bottom, if we take this one as a bottom, we are at the top.
Mm-hmm.
So again, I think we are, the upside target again is limited with this. But as I said, I'm betting against the trend.
Oh,
It
are
is
you
hard.
shorting?
I am shorting. I just sent a signal today. Yes, I did.
Oh,
Yeah.
I didn't follow because the cattle is too expensive for my account.
That's right. Yeah, I know. I'm taking fraction. I'm not taking the whole lot. I'm
Yeah.
taking a fraction of the because a CMC gives me availability to do that. Like it gives me
Right.
permission or
That's cool.
yeah. Okay. All right. So this is another one. Work based on the divergence because there is, as I said, there is no history behind that. So for the top, this is the only tool that I'm using. Fibonacci. For you folks, if you want to use like extension with this, I don't know what level you should go. But if you want to use mine, so you should bring this one down to the first low. Align it with the first low. And that's going to be 120% or 38%. Yeah, so I'm using this. I learned it this way from a guy from Australia. And after that, I use this. I'm not doing zigzag. All right. Any chart, any specific commodity or asset class or something that you want to discuss?
Gold.
Gold? Sure. What time frame you're looking for?
Daily.
Daily. Okay. So here's the daily. Let me just delete some. Okay. So momentum is down, right? Here is your low, here is the high, right? So first of all, price action. You should look at the price action. Where is the next resistance? So next resistance is gonna be here, right? So this is the first one, and this is the second one. So 183, 157, 1857, 1833, right? So these ones are probable scenario for gold. And I'm bullish on this, to be honest. But there is divergence there, right? So between this to this, 127, fantastic, coming to this. So 1833. So I would say 1833 to 1852, there's going to be a reversal. I don't know if it's going to roll over from here or it's going to be something like this. But for sure, there's going to be a reversal here. So if you want to take short position, this is daily. And when I say this is daily, I will go to hourly chart when price is getting there. First reversal, I will short. Right? So
still room to go up.
Yeah, so first reversal here. I'm just waiting, price is getting up there. Going up, and then first reversal, something like this. Confirmation short, because I know that this one is coming down to this area. So this is the top, and there is going to be a good risk to reward here.
Will you short with futures?
Yeah, cash, yeah, this one, yeah. But you can go whatever you want. It's the same dynamic, you know. If it's mimicking this one, it's going to be the same dynamic.
Yeah, like if you were to short the GLD.
Correct, yeah.
Right.
Yeah. Okay. Anything else, folks?
How about crude oil, hourly base?
Crude hourly.
Thank you.
Yeah. So weekly chart, we are seeing, first of all, we are seeing divergence between this low, this low, this low, and this low, right? Easy. Also, RSI shows divergence, but unfortunately, this one is not stretching down to the oversold condition, so this is not a favorite. But still, there is divergence. And also, you can guess, if you put your Fibonacci here, top, low, 27%, it's going to be here. It's not going to be here. So still, it has time to go down, right? So that's the crude. But if you go to hourly chart, here's the hourly chart. Nice. Okay, you had pop there, right? Let me just clean this stuff. Tons of. So let's go with early chart. Save it there. Okay. So what we're looking for? We're looking for divergence. Yeah. So there is definite divergence here between. You see, stochastic. This is RSI is moving forward to the upside, right?
Right.
But price is coming down. So we don't
Yes.
need to draw a line or something, even with IRs, with RIs, we can say that, right?
Yeah.
So, but again, because we are in downtrend, we need to engulf first this level.
Mhm.
If this bullish consolidation works, which I think it works, then it's going to go above this. Then the next important level would be here. So there are lots of sellers there, right? Especially when this one is coming below this. So you see, this is nice. Like we break down. So this level is getting as a resistance. Price is getting back up, rejected, coming down. Again, sharpening upside, again to this level. Let me draw a line here. So you see?
Right.
So because we sharply down, price couldn't go above this, coming down again above this. So 75.57 would be massive resistance here. If you get above this, stable above it, then it's going to be go all the way up to where? The next level would be here.
Yeah.
But before that, we've got this one as well. So 77, then 80. Right. Okay. Shop and Netflix. What time frame? What time frame for Shop and Netflix, Mr. HM? I don't know. Daily? All right. Mr. or Mrs. Sorry, I don't know. Netflix. Okay, let's go with NFLX. I haven't
Netflix
reviewed
formed the shooting star today.
Netflix.
Yeah.
Well, I
Just check.
don't look at it. Oh yeah. So again, when you see this choppy, again, I don't know Netflix chart for a while. When I just bought this one here, go to 300, I didn't touch it. But when I see this type of price action, I tell you, there is a big chance you see divergence between these three tops there. So let's see the chart. Look at that.
Momentum's going down.
Momentum's going down, price is going up. So what's the first one? The first one is there, right? So the first one is there. Again, let me just, okay. So the first one is there, and the bottom for the first one is here. So without looking at the history, because we have got a history, we just want to practice what we learned today. So 27%, so that's why price is getting close to this one and show the shooting star, you see?
Yeah.
Okay, so how this one is coming along with this guy. So there is a huge gap there. Lots of sellers actually sell there. So there is no surprise to see. Why? It's easy to understand this, just because people
Depending
stuck
the
there.
shorts.
No, they stuck there. They just bought lots of stocks here. Just imagine you bought there, price just hammered you and your face is bloody. And when price gets there, you want to sell it at break even right away.
Yeah.
I said, this is crappy stock. I don't want to lose any money anymore. It's been like from April till now, I was underwater. Thanks God it gets me break even level. You want to get rid of it. So that's why you sell it. And selling pressure is coming. So tons of people were there. They bought there, especially with this candle. They thought, oh,
So they
here
got a
is
stop hunt.
exactly here is the double bottom, and double bottom works perfect. Buy, and the boom, and then earning. This is earning. Anyway, so
Volume is
we just
highest too.
we just expect prices coming back down here. And the next one is a shop. Let's see. Shop. Well, it's been a while. I haven't seen this chart. Holy shit, what happened? Okay, what time frame daily again? Okay, so this is positive. Yeah, this is positive. We have got another divergence, which we called hidden divergence. And this is a nice buying signal, hidden divergence in an uptrend. If you're interested, we can cover that one later, not in this session, next session. Let me double check. 78%. Yeah, perfect. Yeah, this is hidden divergence. This is buying opportunity. Actually triggered well, but it went up to 200. Yeah, this is top. 78%, you see? Yeah, but we need to see prices getting up above this. Then it triggers a good level to here. Right there, 75. But needs to close above this. When we are getting to the shopping season, Christmas time, probably people get into it, especially with this price. I wouldn't say it will go there, but there is a good chance if it gets above this again. So there are three levels, three major levels. Here is this 50, 66, and 79. When we get above this. And this is like reverse head and shoulder, right? Especially at the bottom of the COVID crash. Not a bad trade. If you long this, make sure that please put your stop loss at least below this. If you want to be aggressive below this pivot. Because if it goes there, probably you will get a better chance to buy it cheaper. Okay. XLF, the last one. Airline. I'm not into airline, buddy. Don't buy airline for now. They have big time trouble. Okay, XLF. So this is our weekly XLF. We nicely got W pattern. This is divergence between these two. Unfortunately, it didn't get to a certain level that I wanted to buy. Here is the bottom, right? So this is the top. The top gets there, so I'm not going to rely on this. We're going to with this one, right? So this is the top, this is the bottom, and 78% and 27%, look at that. So it comes along with this gap and this wide range bar. So again, this is a nice institutional level, by the way, right? So this level is buying opportunity. As long as it is not there, I'm not going to buy it. But before that, even without any, look at the divergence or so. So this is a nice demand area. This is weekly chart, by the way. This is nice demand area. Why? Top prior COVID crash, then went all the way up, double top, consolidation, flip-flop back up. And this is institutional level, right? So this is institutional level. Let's just rectangular it. Perfect. So it reacted very well. So this one reacted to this level. But next time, if it comes down here, it's going to engulf this. Because how many times this level tested? Once, twice, third time. That's going to be weak. And probably it's going to engulf to this area. Right?
Ali,
Okay.
just one more. I know your time is precious, but I'm looking at the UUP right now. The
Dollar index?
Yeah, and I see
I don't know.
I
I don't know if
divergence.
this broker has it. Let me see.
Oh, okay.
UUP. I don't know if my dollar index. Yes, it had it. Okay, perfect. What time frame?
I'm just on the daily.
Yeah, you're right. So when dollar is bullish, what we are looking for, market crash, huh?
Right.
So everything is coming from
For crash.
everything is
Everything
coming
is-
from either side. We will have a negative NIVIC. So when dollar is strong, we're getting a. You see again. Look
So
at
next
the
week you
price
just sell your
action.
mother and short the market.
Yeah, look at the price action, folks. Again, the one that I said. When we are getting something like this,
Mhm.
let me say. So when we have a spike and then like this, flirting. So this is divergence between these three tops. Exactly, it works the same thing in a downside. When you see something like this, and this one is coming down, going up, and then coming down, and going up, and then coming down like this. So for sure, without seeing an indicator, next time you see that, without seeing indicator, oh, probably there is a divergence here. Market is getting exhausted. So that's why divergence happening. Momentum is shifting. So when you know the concept behind that, you wouldn't just follow textbook things. Divergence happens just because market is getting exhausted. And that's why it's looking for a reversal, right? So we have spike down and then flirting just because it doesn't have enough momentum. And look at this area.
That's a bull. Is it bull? Bull triangle.
Yeah. So this is the top. This is the bottom. Look.
Right to the support.
Probably if there is another lower low, possibly that's going to be good buying opportunity, right?
Yeah.
So Monday, if you see market is up, dollar is down, probably we are getting there. Right. Okay, Rashid is asking for Disney or Snow. I'm sure it's going to be the same thing. Let's analyze one, right? So let's analyze the last one. And we are at 418, but let's analyze Disney just because it is in my list as well. So Disney. Daily, huh?
Oh, look at that.
Okay. So daily in Disney, let's clean this. All right.
It's a COVID
So
low, man.
yeah, we are looking for. So Rashid, what are you looking for? Bullish bounce. probably if we, okay, so if we take out, so there is no divergence, obviously, right? So this is low, this is lower, a higher low, this is low, this is higher low, this is low, this is higher low. There is no divergence, basically. So, but if we look at this, if we take out this pivot, again, because we are in downtrend, momentum is down.
Mhm.
But we are at good support here. It's kind of like a bottom of the COVID crash.
Yeah.
So let's go to weekly again, bigger time frame, see what bigger time frame tells us. Weekly, okay. So you see 88% Fibonacci. Yeah, so wide range bar, it's been tested 100 times. So again, if you wanna trade it, make sure that, because this is not fresh. Also, the momentum is down in weekly.
More
So when you
downside.
see something yourself, look at your father. Your father is saying momentum is down, right? Price is coming down as well. So there is no divergence. Basically, there's nothing is there. Nothing is there, okay? But also in the indicator was there's nothing. So let's go to the chart. Here is the level. So this is the trend, right? So if we take out this SMA 220 weekly chart and take out this pivot, probably it's gonna go to this gap, nothing more. We are at 93, so look at this level, 105. If we take out 105 in weekly chart, then we are going to fill out this gap, 118. That's what I'm looking for, the most upside target that I have. And here is another scenario again. So we have support, break down, back test going down. So this is massive resistance, 127. I'm not sure if it gets there. If it gets there, that's going to be good. But very, very conservative one. If you're long, put your stop there. First target is 105. If we go above this, then it's going to be 116. And when it gets above this red line, make sure risk-free right away. Okay, but stop loss is below this shadow. Okay, right, yeah, you're welcome. Okay, folks, let's wrap it up here. Okay, let me just stop sharing. Yeah.
All right, thank you, Ali.
Yeah, no worries.
Thank you, Ali.
Fantastic.
Everyone in the group chat.
Yeah, all right. Have a good one, folks.
All right, have a good weekend, guys.
Thank
Bye-bye.
you.
Have a good weekend.
Cheers,
Cheers.
bye-bye.
Thank
Bye-bye.
you.
Thank you.